We are back, traders. Welcome back to another video. We are back home. You know what that means. We're back to a regular posting schedule. I wanted to make a quick video talking about what you need to know, some of the biggest details that the Fed just released that you must know about. We're also going to cover some of the GameStop AMC technical analysis, what has been going on there, and less than a couple minutes. I just want to make a quick video, guys. So let's get right into it. Something that has been being overlooked over the last couple weeks that has been brought up to the spotlight, more attention by retail, which makes me happy, is the overall bigger problems in the markets with margin, the Federal Reserve just printing money like crazily, inflation, some of these big economic data points that have just been overlooked due to the overall craziness going on with the quote-unquote meme stocks, Wendy's, Clover. You got all these distraction stocks. Yes, that I quite frankly believe these hedge funds are trying to push to distract GameStop and AMC. And it is so obvious because these companies, first and foremost, don't have that fundamental value, in my opinion. And number two, they're running off no news. So let's start with the first document, which is the Federal Reserve balance sheet, which is called the H.4.1. It comes out every Thursday after the market opens. And take a look at this. For the first time ever, it has topped 8 trillion. 2.2 trillion in MBS mortgage-backed securities and treasury securities topping in at 4.1. If we scroll down a bit, you look here, we have the GTA, no, not Grand Theft Auto. We have the general treasury account coming down to a modest 673 billion. This was around 1.2 billion from the highs of last March, which has been coming down, by the way. And you have the reserve balances with the Federal Reserve banks, which just means the money that these banks have parked at the Fed, which is just a liability on the Federal Reserve side, $3.9 trillion. Now, if we go to the right tab, we talk about inflation, which is real, guys. That came out yesterday. The market seemed to like it, guys. I got wrecked on my VIX calls. You never really want to bet against the Fed. It's very hard to time when the Fed is going to start tapering, in which we're only a couple days away from the Fed meeting, which came in at 5%. Year over year, strip out core and food and energy, you get the core CPI, which came in at 3.8, which is the highest we've seen since like the 1992, I believe. And for the 5%, it was since 2008. So that's pretty bad if you ask me. Are we going to see double digits? I quite frankly think so. I think the Fed is just gambling here that this is going to be transitory. And like we mentioned a month ago, what does transitory even mean? A month, a year, 2 years, 5 years? We don't know. And it's just a matter of time. Next month, I think we are going to see double digits. That's just my guess. I mean, take a look at the used cars and trucks. That is the real winner here. If you bought a used car or a truck this year due to the chip shortage, you have more money in your pockets. You pretty kind of much made money on that. Let's talk about something that people have been talking about, which are the reverse repos. Usually, guys, you see the reverse repo start to spike towards the end of a quarter, the end of a year, when these banks try to fluff up their balance sheets and they start sending money to the Fed in exchange for some treasuries. That's exactly what this is. You have these banks flooded with cash. Look at the spike here. We're not even at the end of a quarter and you're seeing this ridiculous spike topping out any other spike we've seen here on the graph, on the charts. You have all these banks with a lot of freaking cash. What do they do with it? Literally, the repo rate is at 0. It's almost even going negative. It's almost to the point where you're like paying somebody to take your cash for some treasuries. That's exactly what the Fed is doing. It's taking all this liquidity like a vampire. It's sucking it out of the markets, sending out these treasuries to these banks in exchange for cash. Why? It doesn't make any sense to me at all. You're buying 120 billion in bonds and mortgage-backed securities, 80 billion and 40 billion. And you're undoing it with these ridiculous repos. 400 billion, 500 billion. It's undoing months and months and months of quantitative easing overnight via the back door. That is a problem, guys. And this is something that people are starting to notice. I mean, if you take a look at the margin here on FINRA, 847 billion in margin. We haven't seen these numbers ever. We're literally at all-time high. This can magnify a market pullback. When you get these margin calls, it's literally what they say. Stocks take the stairs up and the windows down. This can literally magnify the downside like this. Margin calls left and right. Now as for the question of tapering, it's all a guessing game. Around 50 economists believe that the Fed is going to start to think or talk about the potential of tapering by the end of the year and actually pull the trigger mid 2022 next year. I really don't know. Like I said, don't try to bet against the Fed. That's something I keep learning. I try to keep guessing when they're going to start talk about tapering. I thought we would talk about tapering in the next coming Fed meeting in a couple days, but who knows? But look at this. Federal Reserve to sell corporate bonds and ETFs acquired during COVID-19 crisis. They're already selling some of that corporate debt they've been buying up since last year. They're starting, like I said, these equities are very interest rate sensitive, and once they do start raising interest rates, oh man, guys, it's just not a good feeling with me, you know. The market has been being propped up by the Fed. You take a look at the federal balance sheet. You take a look at the index, the S&P 500. It's literally every time the Fed has been buying, we've been rallying. So just be safe, guys, out there. If you guys are using a lot of margin, just be safe. I don't want to see people blow up. I'm having some technical issues with my camera and connecting it, so bear with me on the last couple of minutes here while we talk about AMC and GameStop. AMC, $50 was my main battleground for support. The psychological whole number at $50. It's right under there. I know we bounced off of 39 yesterday, which is kind of spooky, but usually these drops, a lot of them happen after hours, in which I said don't even worry about after hours. It doesn't even matter. That's the easiest place where they can manipulate it. But if you take a look at AMC and you zoom out, I still see the uptrend there. The fact that AMC is holding at $46, it's very bullish. This reminds me of back in March when we were at 15 and we pulled back to 9 and we traded along that level 10-12 for quite some time. If this can do the same thing here around 46, the volume is going to come back, guys. It's a matter of time before they start paying off some of that debt, some upcoming catalysts before we start to see a rebound. GameStop is in the similar boat with the uptrend, honoring the $220 support. Guys, they can hold 220. The uptrend is still there. We were dangling here around 129, 150s for quite some time, struggling to break above 200. One funny thing I like to point out is I believe people, hedgies, get margin called above 350 on GameStop. It's not a surprise. This is literally right around the third time this stock has been dropped right around 350. They're trying to bring it under 350, and for AMC, I believe it's above 100. Now, why did we drop so aggressively yesterday? Yesterday was a pretty aggressive drop. I'm not going to lie. It was pretty steep. It hurt. I think GameStop was selling their 5 million shares. Don't be surprised if today after hours you see GameStop raise so-and-so capital, the equity raise is completed. Don't be surprised if you see that today, over the weekend, or probably even next week. So I think that's where that selling pressure came in. It was holding a little bit stronger than AMC midday, and then it just sold off. It cracked under. So we're right around 221 right now. It's Friday. It's power hour. So I think the upcoming catalysts are something you need to watch. There's a lot of people on the sidelines, guys. I know the volume has been coming down, but AMC and GameStop are still seeing some pretty ridiculous volume compared to previous days. So it's going to be a long term. I know there's also the SEC is working with GameStop directly. Who knows what type of information GameStop is providing them? Who knows the time frame of this case they're going to build up? We don't know. We'll try to keep you updated here, guys. Unbiased, straight to the point, the truth. So that's pretty much it, guys. Yeah, we're back to our regular posting schedule. Sorry about the weird schedule this week. We were out and about in Texas. So thank you guys so much for watching. If you guys did enjoy this video, make sure you slap a like. I greatly appreciate that. Subscribe, review, or new if you find any value. And I will see you guys out power hour. Peace out.